So, well, we want it, we get it. This is what the theme as far as the overall Wall Street and the close or the recent close as on Friday is concerned. So, I welcome you all to another session of USA Weekly Market Report where we are going to discuss about the price move that we have seen, recent price move. And this is literally a dent on the overall trend, because although there is nothing much which is happening, but this kind of price action does not give you that much confidence and huge amount of volatility. I mean, weeks one day down by 10%, one day up by 10%. This is not a market condition which is suitable or justifiable for anyone. But one thing I was very clear, and I want to convey the same thing to you. I mean, it's been very clear for the last couple of months, and it is indeed crystal clear right now that this problem is not small and this is going to expand, and any big problem will lead to a big opportunity as far as Wall Street is concerned. So, overall, you will definitely see a big price action going forward. Okay, but this is for the long term investors, this is not for the short term traders. So find your opportunity and try to do some research, some hardcore research, so that it will benefit you going forward in the long term. So let us see what is happening and what are the highlights of the last week and what will probably happen the week forward as far as the USA or the Wall Street is concerned. Now, this is something which we are going to discuss as far as the chart is concerned. Fed poised to approve quarter point rate hike next week despite market turmoil. Okay, if this has happened, see, uh, most of the market veterans, there are two sides. Either Fed will move higher or not. I mean, I don't blame. They are market veterans. They know how the market behave, but the kind of image the central bank has in the past were actually make them think different this time. Okay, because in the past they have said something and they have done something, and that image keep on going as of now. But this time they are walking the talk as far as the current move is concerned. So, I mean, despite of the matter that 0.5% or 0.25%, it does not mean much. At the end of the day, whether the interest rate go up by quarter percent or half a percent, it is indeed moving higher, and that's what the important message is, because interest rate is going to move higher, so does the borrowing cost, which means there are something which is about to, I mean, things have already started cracking down. You can see those cracks, but one or two more very big. I'm not saying these are small things, but until and unless something which is very much known, which is very much, I would say, interlinked with not only with the US market but also with the global market. This is my perception. I may go wrong. If one or two incidents or one incident is enough to shake the stock market, until and unless that happens, they are not going to stop. Okay, because it seems that central bank has control on the small banks, so they can manage the depositors. Obviously, US economy or US Fed can print the money, so that leverage they have. But until and unless something big shakes off, I mean, this is not going to stop. Okay, so don't expect. I don't bother about quarter percent or less than quarter percent or half percent or 1%. What I'm looking at is the absolute number. Last time it was 5. Right now, somebody saying 5.25, somebody is saying 5.5. It does not matter. At the end of the day, it is increasing, and that additional quarter percent or half a percent borrowing cost increase will shake lots of company. So that's where the opportunity lies, but for the long term, and that's what you need to understand, and you need to work hard to do some your own personal research and to find something big, okay, for the next couple of years. So First Republic Bank share slide almost 30%, 33% after deposit infusion dragging down regional banks. Now, I have already made a video on this. If you want, you can go and check it out. Understand one thing. Banking, and most specifically banking, these are the stocks. It does not matter how much money you have or not. The banking business is basically running on sentiments and the faith, because they are the custodian of the people's money. So once the faith is gone, or once the faith has shaken quite, I would say, seriously, then the institution will be in problem. Yeah, because they don't have any money of their own. They are borrowing money from somebody and they are lending money to somebody, and whatever the difference is their actual profit. So once the confidence is gone, you will see big time trouble. For it does not matter whether it is a small institution or a big institution. Okay, so let's move on. Let us see what else we have. I don't want to cover the geo-economics situation or geopolitical situation, but yes, it does matter a lot, and it will put additional pressure on the stock market or on any country's economy, because from the last 1 year, one and a half year, we have seen the inflation rise, and that's because of a geopolitical pressure, because two exporting countries were in doldrums, and there is no sign as of now that they are going to stop. Let us see. We will pray for and hope for the best, and we will pray for the peace. And what else we have? Let us see. China cuts bank reserve ratio for the first time in 2023 to support recovery. It simply means, I don't want to do an big time analysis. It simply means Chinese economy is also slowing down. Okay, so obviously because they are the manufacturing, China is indeed a big manufacturing hub. So it means if China's economy indicating a slowdown, it means you can directly correlate with the global economy. SBB Financial seeks bankruptcy protection for reorganization. So here we are, things are about to go wrong. Wall Street rides to rescue as 11 banks pledge First Republic $30 billion in deposits. Great. What else we have? I think similar kind of news, and if interest rate move higher by the end of next week or after 7 or 10 days, you will see similar kind of news. The name will change and the news will be the same. That's what you can see going forward. Yes, so that additional pressure, now pressure is mounting. This is a situation where pressure is mounting. 1/4% this time, again 1/4% next time. Does not matter, does it? What else we have? So let's go and check out the snapshot in the market, and let us see what has happened. The close was very bad indeed, and we can clearly see 384 point downside for Dow Jones, Nasdaq down by 86 points, S&P down by 43 points, gold at 1993 up by 70.7 and up by 3.68%. So gold is something which is performing. So gold rising does give you an indication, because it is an indication that the dollar is not going to hold on very long. I'm talking about the downside, which will probably happen. This is an indication. Okay, then we have oil at 66. Come on. From 7, I have been talking about the range for the past 2 or 3 months in between $70 and $80. Now it is trading at 66. Okay, so one side you may say that it's great because it was trading at $100, $115, $120 couple of months back. Now it is trading, quoting as 66, so it's great. No, there is another meaning to it. It's an indication that slowdown is there, and it is not only a country specific problem, it will be a global issue, because oil is a global commodity, and if there is a slowdown in the price, it also indicates a slowdown or decline in the demand. So this is what is you can get an indication from. So US 10-year yield, now it's closed below 3.5, so it is also very good. VIX now trading at 25.5. It is rising higher. Let us see. Yeah. So now, after a very long time, I can at least see that yields have started falling from 5.15% to now 4.7%. You can see 6-month yield and 4.2% for 1-year yield. Now yields have started crashing, literally crashed down. We will check 1 or 2 yield chart and we will see what is happening for the short term, like 6 month or a year. And US dollar index closed at 103.86. So this zone in between 103 and 104 is very crucial one, because once dollar index started trading below 103, it will be in a downtrend, but this zone will decide which way it wants to go. If it settles above 104, it will be an upside. If it settles below 103, it will be a downside. So there are mixed kind of signal. Although the equity indices closed in red, I mean, looking at the other indicators, it looks like there is a bounce back which one can expect. I mean, we are talking about the next 1 week. Okay, this is a video which will commence after every 1 week or at the end of the Friday. So for the next 1 week, it does indicates a bounce back, because there is indeed a positivity as far as the important data points are concerned. So let us see what lies ahead as far as the important data points, and first of all, what the important price action for equity indices are concerned. Okay, so this is what we have here. So let's go to the chart and let us see what is happening. So you can clearly see a downside. I mean, here we are, because Fed does have their own problem. If they give any sort of indication that now the situation is going to be out of control and we are not going to hike rates, it does not matter whether they do not increase the rate or they will give commentary is enough. A commentary is enough that we are going to slow down and we will wait and watch. These kind of commentary will be very, very dovish for the market, and inflation is not going to fall down. Once market gets the belief, people started pumping the money into the market will shoot higher. But meanwhile, your inflation problem remains the same. So that's what the problem is. Here we are. So this is how the Dow Jones looks like. So for the next 1 week, if Dow Jones continues to trade above 31,250, what we are actually looking at for the next 1 week is a range which is in between 32,600 and 32,970. So this is what we are looking at, and that's why I'm saying that there is a potential bounce back, which we have already seen as far as the different data points are concerned. I mean, in a normal market, if this inflation factor is not visible, you will definitely see a huge move. So here we are. Currently Dow Jones is trading in between 31,750 and 32,300. Once Dow Jones started trading above 32,300, 32,310, you will definitely see a big move towards 32,600 and 32,970. So that's what you're going to look at as far as the big price action is concerned, and I don't want to go beyond the range. Let us see how the range plays out, because market is unstable right now. Okay, so let's go and check it out, the Nasdaq, and what Nasdaq is telling us. So this is what the Nasdaq is telling us. And anyways, if Nasdaq continues to settle above 11,560. Okay, if Nasdaq continues to settle above 11,560, it is indeed above the breakout zone, and because it closed above 11,620, it is again a positive thing. So if Dow Jones, if beg your pardon, if Nasdaq continues to sustain above 11,560 or more, we have couple of targets to look at, starting with 11,832, 12,000, and hopefully 12,260, 12,270. So this is what we are going to look at. But understand one thing: 11,560 is going to be the most important level. If Nasdaq falls below this level, Nasdaq will again started moving lower. Okay, so any expectation of bounce back, yes, there is a clear cut indication of bounce back, but make sure that Nasdaq is not falling below 11,560 or 11,500, which is the most important one. Now talking about SPX or S&P 500, here we are. So I think the similar kind of price action we can see for S&P 500 as well, as we have seen for Dow Jones, a bounce back that's been going on. And here we can't expect something very phenomenal because there is no such indication in the market. If it happens, there is no such indication as of now. If it happens, then good. Okay, but take your profits back as soon as possible. So for S&P 500, what you can do, you can have your close support and stop loss at 3,900, and similarly on the upside we have 3,984 and 4,026 as far as the next target is concerned. I don't want to stretch targets for S&P 500 because there is no point doing that. Once the volatility creeps in again, you will see a fall, an upside or a downside, so both situation prevails equally. Okay, so let us see what is happening as far as gold is concerned, because gold is giving you an indication that there is something else which is happening. You can see a humongous move from 8th of March from 1800 to 1993, a 10% move, or nearly $180 worth of move we have seen, and you can clearly see how gold is indeed moving, and whatever is happening is within the range. I have been talking about this gold price action for the last couple of months because the gold futures, this is the chart of gold futures, and it's been trading within a range, and those who have played this range works out quite beautifully, and it never fails to give you returns if you just believe in this trend, and if you just play out the levels or the edges on both the side. So 1999 has already crossed. The next target will be 2078, and once 2078 gone, you will see a big uprise or a new trend will start. And this time the momentum, or the, you can clearly see the candle, it is huge. So there is something very good which we can see right now. I just hope that this time there will be a breakout in gold futures. So on the downside, keep your stop loss. If you have already taken a position, keep your stop loss at 1919 and a target of 2078, 2079. And once gold futures started trading above 2079 or more, you will see a big price action or a new trend will start, that we will discuss later. Now the next important part is VIX. I mean, VIX is rising. There is, yeah, here you can see the VIX is indeed rising, and there is an indication that it will rise further because it's been quite visible as far as the monthly chart is concerned if you're looking at the indicators. So VIX sustaining above 25 is not a good sign. Okay, although it's not a scenario that we can say, I mean, it looks like 2008. The only thing is banks were not prepared last time. This time they are prepared, but still you can see a big price move. Interest rate rising higher, you will see accidents, and simultaneously big VIX will move higher. So a move towards 39.9 and 48.5 is completely visible as far as VIX is concerned, and I'm talking about next couple of weeks. VIX may rise very high or very low in a single day scenario, but this is what VIX is telling you, so beware, I would say. Yes, the next one will be WTI crude. So let us see. I mean, $66 is seriously a joke we have in front of us. This is Brent, not WTI. So sorry, I think WTI was fine. Yeah. So this is what we have here. So 66. I mean, I think I have talked about 60, 62 couple of weeks back, but this is a serious damage that's been happening, and now the big range is playing out, because if you are looking at the big range, you will see something like this. So what does it indicate? Because sooner, if oil price is falling down, uh, it may be a good indicator for importing countries, but understand this, it also indicates a slowdown, a big slowdown, and global consumption of oil is very very high, and it's not only used for energy purposes. There are, I mean, huge amount of things which one can do from oil. So this has been used as a raw material for 80% of the products human beings are using across the world. So if WTI Brent sustains below 66, and if it falls below $60, it will be a huge pressure, because technically it will move towards 33. Okay, so this is something which one must look at. So uh, as I told you, it is good for the companies who are using oil as a raw material. These are good for uh, the importing countries, but this is, and there is an indication which one must understand as well. Okay, and let's see, as I told you, let's see what's happening as far as the yield curve is concerned. This is the 6-month yield, and you can clearly see things have started falling. So does the indicators were very much on the overbought side, and you can clearly see that now a slide down is visible. Okay, a slide down is completely visible in the chart, and the kind of chart we have, I don't have any doubt, if this is the trend, it will, and if it retests the 200-day moving average, I'm talking about the 6-month yield, the 200-day moving average, so it will fall from 4.7 to 1.34. Now, do you need to directly correlate the same thing with the impact in the equity market? Maybe not right now, because this is a transition phase, and in between the transition phase everything turns volatile, be it fixed income, be it equity, be it bond, everything will turns volatile. So if you want to directly correlate with as a trader, it would be very hard. So only the professional can do it. Okay, because they have their proper risk management. Those who have their proper risk management, does not matter whether they are individual or institution, they can do it. But if you don't know how to deal with these kind of scenarios, stay out. And similar with yes, the 1 year yield, it is indicating a lot more than the 6-month yield, and you can see, literally see the crash. And if it falls towards the 200-day moving average, you can see a fall towards 1.4. Okay, so the transition phase has started, and things are about to turn volatile, where although it is good for the equity market in the long term, but in the short term things can go haywire on both the side. And this fall, I mean, as far as dollar index is concerned, as far as the yields are concerned, as far as the commodities are concerned, the price falling down is actually a good thing, but there are certain conditions. Number one, the growth is not there. Number two, the inflation is high. Number three, the interest rate is high. All these conditions are not met, and these are giving you a different signal. And if this is the scenario, let me tell you that everything will start falling down. The reason is very simple. There is no demand, or demand is slowing down. I can't say there is no demand, because there are enough data. People are indeed consuming, but demand is slowing down, and that's why everything has indeed started falling. And equity market is not going to be the, I would say, the mysterious child, or the privileged child is the right word, but it's going to fall and fall in the short term. Once things, or once dust settle down, then we will see a steady rise on each and every indices. Everybody finds their right foot at the right place. That will be a scenario. This is a transition phase, but yes, at the end of the day, with all the discussions I started saying one thing, and I will finish with the same thing again. This transition phase comes with lots and lots of volatility, but at the end of the day, this will create a huge opportunity going forward. This may not be the, the, you cannot match the pace with the rise of 2020, 2021, but it does not matter if it is a steady rise. Okay, but there is something big which is coming for you. So if you are not prepared with a positive mindset, you are definitely going to miss out. There is an opportunity which is coming. Grab it for the long term, and you will definitely make huge amount of, I would say, wealth this time. And this is an opportunity which you are getting after 1.5, or rather 2 years of despair and loss. So be optimistic. There is something positive which is coming for you, and be ready to grab it. So this is the end of the video. Thanks for watching.